Hello, everybody. Kirk Spano introducing Shooter's Major Markets. Shooter, how are you doing today?
I'm doing awesome, buddy.
That's good. A little bit better than me. I told you I have a funeral to go to.
Yeah, that's why I didn't ask the question.
Yeah, that's why I had to learn how to tie a tie again. I haven't, I don't know when the last time I wore a tie was. It's been a while.
Yeah,
all
I
right.
had clip-ons.
I'm going to just set you on your way. Talk dollar, talk markets, talk whatever you want to talk. 20 minutes, go, and I will see you later this week.
Sounds like a plan.
All right, take care.
My best to you, buddy.
Yep.
All right, well, let's jump right into this. I'll start off with the dollar. You got my screen?
Yes, sir.
Beautiful. Well, actually, I'm going to start off with Bitcoin because that's what the chart is up here. So now we have, I think we're in a challenging place. Bitcoin right now, I've got it as an ABC. So, we're going to put in this 43,430. And then, I think we head lower. Now, the challenging part is I would rather see more of a 50% back around 45, right around 45,122. And then we pull down. So there's a little noise there. But let me jump over to GBTC and just go over the look here. Now, quite often the ETNs versus spot are more reflective of a price change. And right now, it's the count suggests that our intermediate wave 4 is in around that 34. So that's contradictory to what Bitcoin itself is showing in spot because it's showing that we have more of a downside. But we have this huge flat that it looks like we're going to build out. So that noise will continue for a while. It's not something I mean, we need a catalyst, I think, to get back out of this. However, if I bring up IBIT, I mean, there's really not enough history to even bring that chart up and, really draft anything on it. So I'm just going to tee off of GBTC. The assumption is that all Bitcoin ETFs will be similar in how they reflect spot. We won't know for 3 or 6 months which has the better model, who's buying better, et cetera, et cetera. But I think we should look at GBTC as at least having a starter position on here. And then it is more of a swing trade than a longer position trade because of where this primary wave 3 is up around 46,776. And then we're going to back test to about 35. So now, prior to this week's close, I was looking for our next entry around 33, which is why I've left the label up there. Anytime we have what I call our ghost prints, in other words, we got the print in the count and then it disappeared and moved higher, moved lower. I always like to keep that on my chart so I have a visual of where we might go. But I think that's going to be a pretty aggressive drawdown. So I think the scenario is by May, June timeframe, I think we're done with that 46. So whatever this run is in Bitcoin, we might push up a little bit higher. Might take us a little time to get back up there. That would be consistent with that look. But the other thing too, I think with Bitcoin, I think spot may have a tendency to drift lower than the ETFs. I'm just going to flip back and forth between these because I think the volume from the investor pools, specifically BlackRock, even though they have their own ETF, and, even Fidelity, those are the largest pools of investors. So they're not going to be buying Bitcoin itself. They're going to be buying the ETFs. So anytime price moves, it's because of volume. So, but that's my thought. I think you can have two different pools. So we can have an ABC pattern that manifests in Bitcoin. Well, I think there's a chance that the ETFs could still recover. Now, I thought it was ironic because correlation seemed pretty close. Both GBTC and Bitcoin, the drawdown was about 21%, which was very similar. I didn't realize it was that similar until I looked at it yesterday, but that was sort of the thought. All right, let's jump over to the dollar. Now we're in no man's land, but our count is flipping around here. I've gotten different counts throughout the week. So, we're at a crossroads. We're still in no man's land as far as I'm concerned, right at the 50-day. It's not bullish because we're really not pushing above it. It's not bearish because we're not pushing below it. Now, what I did notice, as we had the Fed auctions this week, it hit indices directly right after it happened. Let me transition over to the SPY with that. So, that allowed us to close halfway down the candle for the week, which really wasn't bearish. I mean, if we go down to the daily and look at it, Friday was somewhat bearish, closed towards the bottom of the candle. But at this point, I think we're going to put in this flat up towards the top. So we're going to stay in this range between this 485 and 467, I think, for the next week or two. And then we should take our final leg to that 494. So there's basically a box you can draw right here. So a person who is holding common shares of SPY could sell some covered calls here around 500, and I think you're pretty safe. If they get taken from you, rinse and repeat, is sort of the thought. Sell some cash secured puts, maybe a little tight because you want them to get put to you so you can stay in here and sell some more covered calls to the upside. That's sort of my thought with the S&P. Now let's jump over to the NASDAQ. Now, a little weaker on the close. A lot of the Magnificent Seven, came off in their candle on their weekly candles. Now, we're not going to cover that today, but, in general, I thought entering the year, my impression was that we needed Tesla and Meta to be stellar as far as, just pushing for us really to get an aggressive push up. Well, that didn't manifest that way. So we had this a little more aggressive push in the NASDAQ versus the SPY, not quite double, but significantly enough, much stronger leg. We have 3 solid generals there. Basically, that's 3 bullish candles that exceed the prior lower candle. And so I expect us to come in around that 432.54 on our intermediate wave 3. And then we get our 4 down here around 424. And, then we continue towards our primary wave 3 around 465. And that's really the take between the SPY and the NASDAQ. And let me jump over to the Dow. Now, we wanned a little bit. We were putting this flat, but we recovered well, but not as well as the SPY and the NASDAQ last week. So again, if we're looking for breadth, the breadth is again neutral to expanding on the Dow. The NASDAQ is not really expanding, okay? The SPY is a little bit, okay? So, looking at the Dow, I think this is going to be a big factor in how aggressive indices are the rest of this quarter. So if the Dow continues to move and this 3 pushes, becomes a longer, more aggressive wave, then I think we'll continue to see breadth expand on both sides of the markets, whether it be the FANGs, the Magnificent Seven, the SPY, industrials, etc. So once we put in this intermediate wave 3 around 387.50, then we're going to put in that 4 around 381, and then we put in our primary wave 3 around 390. And that pretty much, so another type thing. You could, if you own common shares in the Dow, you could sell some covered calls around the 61.8. I didn't note it on the chart, but realize I don't know if you see the theme, we sort of have this flat building out in the indices, which means we'll sort of stall out, sort of my thought. But let's take a look at the Russells. Now, we got a nice push last week, gap and go, which is good. However, the count is telling me now that's pretty much done. So our last entry short was at 198.59. Now I got tied up in other things and forgot to put that on Friday because I wanted to put some shorts on. So we'll look at that the first of the week. Basically I just want to target the 200-day, or maybe a little even lighter, the lower section of that band around 192, and look about 60, 90 days out as far as time frame on those. But realize, according to Dow theory, we need all 4 indices to be in a bullish mode, to be in a bull market. Well, we don't have that. Even with this, if we closed higher than our 205, I would say, yeah, hey, that's probably the case. But at this point, we haven't. So I don't know that necessarily is going to manifest. I just, if we get above that, then I have to change my mind. Real simple on that. Where you're wrong. So let's jump and look at TLT. Now, TLT it's a mess right here because the count's flipping back and forth. I had to go all the way down to the 90-minute to get this count because I kept getting a bullish count on the larger time frames. So I really had to drill down to get my visual here. And our breadth is really aggressive. We could push down to that 89, or we could push up to that 102. And, we're sort of neutral at this point. I think we're waiting to see what the Fed does. These are not very aggressive bearish candles. I wish they were, something like this more, where we get a little more of a flush. At this point, it's like everybody is in I don't know mode. We're waiting on what the FOMC minutes tell us on which direction we're going to go. But now the tone that I'm seeing from all of the tells that I bring into my mind throughout the day, throughout the week, is that everybody thinks they're going to pivot in March and cut rates. So that sort of is the thesis. So that means that's what the market thinks. So if that does not come out of the FOMC meeting, that's a good reason why we will see indices turn down. That could be sort of like a dip. I don't think we get 3 or 5% though. I mean, I would be surprised if it's more than 3%, sort of as my thought. Okay, let me jump over. I want to cover a couple sectors. I wanted to cover aerospace and defense. And this is more of a tee off of what's going on in the Straits over there in Saudi Arabia. We had a chemical tanker that was hit Friday. Maybe it was Thursday night. But it was burning and at risk of sinking. Now, a couple of weeks back, maybe even a month and a half ago, I started chatting about, once we start having an event in the Straits, we could have a sort of a tanker blockade. And part of that is because it becomes so expensive to insure the tankers to move the cargo that the shippers just park their ships because they can't afford the premium. So, we haven't heard that's happening yet, but that will have a dramatic effect on the markets. So I think XAR is twofold, and I'll go into oil just after this because that really is the second part of my theme here. Defense is something that, if we're going to continue to escalate, I don't think Iran just quits. They're going to continue to fund the Houthis. Hopefully I'm pronouncing that correctly. So we're going to have this proxy war. And I don't think it's just going to end in a week. I mean, May, but, historically, that's an area where we probably shouldn't have gone as a country because it's a religious war that we're getting into. So I would think that defense would at some point get a bid. Now, part of my challenge with just defense itself is LMT and a lot of other names that I looked at. Really, the charts look horrible. So this was sort of my way to get a piece on in defense and yet include another sector that we're bullish on, which is aerospace. So XAR was the perfect solution for me. So we've got a primary wave, and you'll notice something on the charts that we're starting to note a 90-minute starter position, a half position, and a full position on the chart, just to be a little more unison in how Kirk chats on, as far as using the VSL. So you'll see that. So we have a primary wave, and right now, you should be at roughly a starter position on this to maybe a half position because it's, close on that candle was good for, an entry. And then obviously just bring up your overlays, your Bollinger Bands with your fib extensions on your charts. And this is what I do to scale in. And I just note, where our mean is, where our first deviation, second, third, etc. And I do a second, third, fourth entry based on those lines. Because the reality is most of the time, stock doesn't do this. It doesn't overshoot the third standard deviation very often. Most of the time, it's tagging the second one, just in the line. So this downtrend. So we have a pretty good idea from that tool to get a visual on where a good price is for a stock, and it's real simple to use. So that's what I would suggest using. Now, let me jump over to USO. Now, I really don't like this instrument, but there really is nothing else besides oil futures. Okay. And I know that a lot of you aren't going to trade that. So, and this really teed off of a video that Dale Pinkert did on commodities with Market Minute. And, obviously they addressed a number of commodities, and, the conversation came up about oil. And I'm like, anytime I hear something between the lines, I start looking things up. And this is where I came in and pulled up oil, and then I pulled up USO. And the first thing that I want to note here is, the chart, if I do a scan using the software with the artificial intelligence in there, it's telling me it's bearish. But if I manually work up the chart, I've got a confirmed low and a divergent low, nice breadth in that, and a much larger time frame. Now, 50% back measures up to about 108. So it's got a decent amount of upside. Nice push here. I'm basically thinking here, there's really, with the risk of war, continuing, the issues in the Straits, there is I think a good likelihood that the Saudi oil fields get hit in some way. There was a time period, I'm not recalling what year, where numerous oil wells were hit and were burning. That is going to have a very dramatic effect on oil. And right here with this bottoming pattern that I see here, our breakout line really is 129.92, which is, quite a move from where we are. So I think it's sort of a hedge, which is another subject that came up in chat in Rare this week, about hedging. I think both XAR and USO are a form of a hedge against really the swan event of the war escalating, and we end up having a problem with oil all of a sudden. But I also want to step out, and I want to go back up to where the larger time frame on this chart. And this is the insanity of my work. I'm just methodical. I look at it both sides here. When we had our high in January 08, where we put in this whatever 900 or whatever it was on USO, but realize that's not an accurate price because it's been split at that point. But my main point is we have a confirmed high and no divergent high. So it's not done. Now, when I come in and I throw in an overlay here, and this is, again, part of my madness and how I look at charts, I'm looking for the extremes. So if I throw up a harmonic pattern or a harmonic scan on here, it gives me a visual of what the extreme upsides are based on the history. Now, this also is part of my work, is that in these bottoming patterns, when we have a drive 1, a drive 2, there are two outcomes, an XABC pattern, which we have here, or a 3 drive. And just real quickly, I'm going to bring that back up to give you a visual of that. So in a 3 drive, we would be looking at, this is our 1, this is our 2, right? And this is our 3. And then we potentially could retrace 100% of that move. Then at that point, that's really one of the only patterns that we potentially have. So those are the two outcomes with this type of look as far as a floor. And, so I think it's a good risk scenario right now. And that's what I sort of wanted to cover today. Hopefully this was helpful to some of you in chat. You have any questions? Of course, please reach out. I'm also going to encourage you folks to join us and on our YouTube videos. Obviously, $1.99 to come in there. It really, it helps just cover the cost of data and everything else. And the other subscriptions that both myself and Kirk bring in to, hopefully someday it starts paying for that. But that's what I have, for this week, folks. We'll catch you next time. Great trading. And hopefully you guys kill it this year. You guys have a wonderful afternoon.